Hi, I'm Jacob Murad, president of KPA Lawyers. This is the second part of the series on how to save money while starting your business. In the first video, we talked about just starting your business under a sole proprietorship. In this video, I'm going to talk about another form that isn't necessarily known as much as the corporation, and that's the partnership. Now, there's three different types of partnerships. There's the general partnership, the limited partnership, and the limited liability partnership, or LLPs for short. So I'll take each one in turn. First, the general partnership. A general partnership is very similar to the sole proprietorship, except it's more than one person. A sole proprietorship is one person starting their business. They're not registering anything, they simply start. General partnership is two or more people. There could be 3 people in partnership. There could be 40 people in partnership. Also, it doesn't necessarily have to be people. A corporation could be a partners with a person. 2 partnerships can be in partnership with each other, and things can get very complicated. But let's just talk about people for the purposes of this video. So let's say 2 people are partners with each other. And what that means is they've decided to enter a business venture and to pursue profits. In other words, it can't be a charity. They need to pursue some sort of profitable venture, and they've decided to split the profits equally. If they've done that, they're now a general partnership. And in the law, that means that both people are equally liable for anything that may happen. They can also sign contracts for the partnership and for each other. And they split the profits equally. Unless, of course, they make a decision and have a partnership agreement that lays out the day-to-day aspects of their partnership together. So what are the pros and cons of a general partnership? Well, the pros are very similar to the sole proprietorship. What you have here is a very flexible organization that you can just start. You don't necessarily have to register anything but the name. And you can simply start working and splitting the profits equally together. What are the cons? Similar cons to the sole proprietorship. When one person dies, the partnership is over. When the partnership is, let's say, meant to be for a particular purpose and that purpose is fulfilled, the partnership is over. So it's a little bit tricky when you're operating a partnership in that sense. Also, one thing you should have is a partnership agreement that lays out the rights and responsibilities of both partners, just so that when fights begin, you know exactly what each party should be dealing with. So that's a general partnership. The next form is the limited partnership, or the LP. In a limited partnership structure, people do this because you want to raise money to start your business beyond just debt. Besides going to your bank and raising money through bank loans, you actually want to go to friends, family, and so forth to try to get certain ownership in the business. But the people that are investors do not want to be liable for anything in the business. They simply want to invest. So limited partnerships are great for that because you have a general partner and limited partners. So the general partner runs the actual business and as a result is liable for anything that happens in the business. The limited partners are only liable for the amount of investment that they put into the business. So let's say they invest $100 into the business. They could lose their $100 if the business does not go well, but that's all they can do. They're a limited partner. Limited partnerships are used to this day, and there could be very large organizations that are even publicly traded organizations and funds that use the limited partnership model, and it's very effective, and they don't incorporate. Now, the thing about partnerships, whether it's a limited partner or a general partnership, is that partnerships are not a separate legal entity. Instead of the partnership having to file taxes, when the income comes in, the income can be offset by the business expenses, and then the rest gets split up accordingly and taxed accordingly. So again, this is a nice tool when you're trying to raise money and there's more than one person that wants to split the profits and you're starting a larger business. But you don't feel like an incorporation is really necessary here. The last type of partnership that I want to just briefly discuss is the limited liability partnership, or LLP. An LLP can only be used by certain regulated professions, lawyers, accountants. You check the Limited Liability Partnerships Act in Ontario, and I'm sure each province has their own type of statute that regulates this. So if you're a regulated professional and you want to practice, say you were a lawyer and you want to practice law, so in that case you have management responsibility, but you don't want to necessarily be liable for the acts of someone else as you would in a general partnership. But you don't want to not run your business as is the case in a limited partnership, where limited partners simply invest money and have no management responsibility. In the limited liability partnership, you want to have some management responsibility and oversight, but you don't want to be liable for the acts of your partners. In this situation, limited liability partnerships are used, and that's why they're used very frequently in the legal community and the accounting community. Besides that, it's very similar to a limited partnership, and the tax consequences should be looked at. Those are partnerships: general, limited partnerships, and limited liability partnerships. You can raise money under a general partnership, limited partnership, or LLPs. You can raise money as if you were the owner of a corporation trying to raise money by selling shares. In partnerships, you can sell something called partnership units, and a lot of the rules are the same. So again, when you're considering starting a business, just remember that you don't necessarily have to incorporate. There are other options. Thanks for watching. And if you found this useful, feel free to click on the next video, and I'm going to talk a little bit more about corporations.